But looking at some really good solid plays, and I made a list here of ones that I still think are worth buying the dip on, and a lot of that is big tech. Okay, we're looking at Amazon right now; it's down at 3,300, which, if you asked me once it broke over 3,500, if we could see it retrace to 3,300, I would have told you it's possible, but not likely. And to be completely honest with you, I probably would have told you were crazy if Amazon was going to retest at 3,300 a week from it breaking over 3,500. That being said, I think this is a huge opportunity. If you feel like you missed the boat on Amazon, I do think this is going to be a good opportunity. Look, it came down to the 200-day moving average and bounced off of that beautifully right at 3,300. The 200-day moving average right here, it's bounced off of that and actually is starting to react a little bit better today. Let me minimize this too. So we come here and look at Amazon on the 5-minute, and it actually did exactly what you would expect it to. Came down to the 200-day moving average and is bouncing really nice going into the end of the day. Whether or not this continues remains to be seen, but we shall see. I think big tech is still definitely one that you can kind of like treat it as a safe haven almost in times of volatility. That doesn't mean that if you buy Amazon, you're going to be fine, but the bounce back should be pretty nice on an overreaction like this. Apple's the same way. It's down 2.5%, and we can take a look at the daily chart and see where it's sitting. So it actually has a ways to go to correct all the way to the 200-day moving average. Will that happen? I think that remains to be seen. I think there's certainly a possibility that we see it at 138, which is a previous support. But even that's not looking half bad going into the end of the day either. You can see right here, it's making a pretty nice move back up over 142. Can we see this continue? Like I said, I think it remains to be seen because we do have some catalysts that may prompt some negative reaction. But we'll have to see. Disney also, look, this is a reopening play in a time where we're seeing massive demand for travel and people getting back out and going on vacation. The Disney parks are opening back up. We just saw some more restrictions being lifted on the federal level as far as travel is concerned. This is going to be great, not just for Disney, but also something that I'm personally in, which is Airbnb. And this is actually held up rather well, all things considered. It's still red. It's still down 3%, but it is starting to bounce back as well. I think that's something to definitely look for. Any of the travel stocks, the beaten down epicenter type stocks, and yes, Penn comes to mind. You guys know that Penn's my biggest position, and so this definitely looks like it could be a potential bounce. Here's one thing that I do have a little bit of concern for. I have win calls, and this since I've started trading options with this particular account, with our Own the Chaos crew account, I'm undefeated in options calls right now. I haven't taken a big loss on any of them. I haven't taken a loss period on any of them, which I know it's coming. So, but anyway, looking at when I have win calls all the way out to November, the strike price is way too high. It's at 97.5. So this might be something that I end up probably having to take an L on, but we'll see. I got time on my side still, so I'm willing to be patient with it. But wins exposure to Macau is definitely something to, make yourself aware of. But we'll see. We'll see. So those are kind of the areas that I was thinking about potentially going into. And then there's infrastructure. Okay. Union Pacific. Woo, man. Let me take a drink here. Man, I'm really regretting my decisions from last night. You know what, though? It was totally worth it. Go Ravens. What a freaking game. I still can't get over it. Fatman Zoom actually reached out to me just before I went live and was like, bro, I cannot get over last night's game. It still doesn't feel real. And I was like, it's just wild. The city is like going crazy still from last night. Anyways, getting back to my next area that I think that I would look for would be infrastructure. We still have the infrastructure bill coming through. Stimulus is going to impact these infrastructure type stocks. The first one that came to mind was, yes, Cleveland Cliffs, and we'll get to that in a second, but Union Pacific has also corrected substantially. Look at this thing. It's not sexy. This isn't going to be something that you see on any other YouTube channel. I can almost guarantee it. Any major YouTube channel is not going to be talking about the unsexy, Union Pacific stock that probably a bunch of old white rich guys own, and that's it. But I'm telling you, this could be something, that could be a really good one to go hang your hat on, only because of how much it's corrected and how much this is actually going to be positively impacted by an infrastructure bill. If you guys don't know Union Pacific, they are transport company, primarily with trains. And so, like CSX, for example, that would be another one certainly to take a look at. But Union Pacific's definitely going to be one to keep an eye on. The other one, yes, again, Cleveland Cliffs. I have calls on Cleveland Cliffs for next month. They expire next month, so I still have time on my side. I feel good about this. And this is corrected all the way down to the 200-day moving average. Today is the first day. Today is the first day that Cleveland Cliffs will not be sitting in its ascending channel for the first time since March, which is pretty crazy when you think about it. It's down 10% today, and it stings a little bit. Not going to lie. It stings a little bit. I just am blown away. The first time this is you can see this. This is an ascending channel. If you guys don't know what an ascending channel is, it's basically, when a stock just kind of falls in line with this upward movement and just kind of sticks around in this channel, doesn't really deviate from that a whole lot. And it's been a beautiful chart for the last 6 months. Today's the first time that it broke out of that, broke to the downside. That being said, we're getting pretty close to the 200-day moving average, so it would be encouraging to see if it bounces over this or from this. And I think that could be the case. This is another one that's going to benefit greatly from an infrastructure deal, despite what's going on in China. So I think that this is definitely something to, potentially take a look at and see where you can take advantage of some of the panic, because that's exactly what's happening here, folks. We're seeing a lot of panic, and here at Own the Chaos, we capitalize on that panic. We don't follow the crowd. We go against it.